Hi, good afternoon. Welcome to the Marketplace. Coming up this afternoon, government announces an increase in daily minimum wage and 10% hike in base pay for public sector workers. Also coming up, government to bring back the Ghana Integrated Tax Management and Information System to ensure tax compliance. We hear from a presidential advisor on the economy, Setekwe.
To say that we stopped implementing an integrated domestic tax system, automated, when we had successfully done to agree the icons, which was West Blue, GIFMIS, thanks to.
As oil palm producers call for government support as 2024 exports plunged by over 50%. My name is Darryl Kwao. Thanks for being with us. Details coming up. Thanks for staying with us, everybody. We begin with some news just developing. The government has announced a 10% increase in both the national daily minimum wage and the base pay for public sector workers as effective the 1st of March this year. The new minimum wage will now be 19 cedis 97 pesos. The decision was made following an emergency meeting in Accra today where the government officials alongside the tripartite committee agreed on the wage adjustments. Joining me in studio, host of Beyond the Numbers, Winston Taki. He's been looking through statements released by the presidency, and what does it say?
Normally, most of the time, we expect this negotiation to have been done a long time ago, but because of the transition in the new government, there has to be time for that to be concluded. And so today we got a release that the Ministry of Labour and also organized labor themselves together with the tripartite committee came to conclusion to increase the minimum wage by 10%. And that tells you that it is now being hit at 19 cedis 97 pesos.
And the base pay is also going up.
Absolutely, by 10%. So base pay basically is the guaranteed amount that employees are supposed to earn at the end of the month. It doesn't change, but however, there are some allowances that they benefit. Over the years in 2023, we saw the need or the call for their adjustment in COLA. We saw 15% there. That was in 2023. In 2024, the base pay was increased to 23%. So there has been an increment there, and that was when it was higher. But this time, the government has to be quite cautious because they are taking into consideration inflation, economic situation as of now, and also taking into consideration that there are some fiscal responsibilities ahead for the government. Therefore, they have to manage the wage bill or compensation, which is hovering around 19 million Ghana cedis.
Yeah, they also have to take into consideration the strength of the local currency. We'll be talking about that in the course of the program. Now, it's good news. The pay has gone up, but as you point out, as to whether public sector workers will be excited by that margin of increase, that's another thing to discuss because of the economic situation.
Yeah, absolutely. Already they were supposed to be on strike or probably are on strike. That is closer against some other demands being there. They are really calling for their workers. No, this particular strike, they are divisive nature. in terms of what the employees are demanding from government. They said they should prioritize their welfare instead of going on this particular action. However, this is a statutory demand every year, every quarter, that's supposed to be done, and therefore government have taken that decision. Surely they are hoping that it can be increased subsequently. Like you say, employees always need more.
Yeah. They always need more, including the private sector.
Very necessary, very necessary.
Western Turkey, appreciate the update there. Now, turning to other news, Presidential Advisor on the Economy, Tekwe, says government will bring back the Ghana Integrated Tax Management and Information System, GETMIS, to ensure compliance. Ghana Economic Outlook event organized by the Ghanaian German Economic Association in Accra, Mr. Tekwe emphasized the need for tax rationalization to enhance efficiency.
I think that if we rationalize the tax regime, if we have difficulties, we introduce two taxes anytime we did austerity: National Fiscal Stabilization Levy or Fiscal Stabilization Levy, right? And then we had the temporary import duty. And anytime we went out of an austerity program with the fund, we removed them. So they were keeping them. It was the reason for most of the levies that we are keeping. So this summarizes the rationalization that we have to do to the fiscal regime. And until you do that rationalization and raise enough revenue, right, to contain your expenditures, you are going to borrow. And if you borrow and you do not have a mechanism for repayment, you are going to default. This is the challenge, facing our country. And my topic is on the private sector. So a fiscal regime, in essence, what I'm saying is that however you look at it, if you distort any of these taxes, if you overspend and you have fiscal deficits and whatever, as they say, the economists, you crowd out private sector. Interest rates go up, inflation goes up, deficit financing results in all those things. And it makes life simply difficult, for the private sector. So I'm not excusing private sector, which needs to be competitive, which needs to do things, better also. But I'm also saying that we should not make the work of the private sector worse by making a fiscal regime and consequently the monetary regime worse. And so for us to get out of the hole, we must begin to tackle the things that sent us into the hole in the first place. And it's a task which, incidentally, for me, as I always say, ERP sub-boy, we're just going to be repeating things that we did in the 80s and 90s. Rationalize the tax regime to make the four taxes, strengthen them, tax administration, to say that we stopped implementing an integrated domestic tax system, automated, when we had successfully done, to agree, the icons, which was West Blue.
All right, you're watching The Marketplace now. Turning to one of our top stories this afternoon, Ghana's oil palm exports have seen a decline, a dramatic decline of more than 50% in 2024, according to the Oil Palm Development Association of Ghana. Samuel Avala, the association's president, attributes this significant drop to inadequate support for the sector and the influx of cheaper oil from competing countries, which has hindered the industry's growth. He joins me on Zoom to tell us more. Before you do that, and welcome to the program, I just want to let our audience in on some stats from the oil palm industry. In 2021, Ghana's palm oil exports were valued at over $48.66 million, with Senegal being the largest importer. Destinations included Niger and the Netherlands, with exports amounting to approximately $10.25 million and $4.2 million, respectively. Now, let's take a look at 2023. Next slide, please. The total value of Ghana's palm oil exports was at $53 million, accounting for 0.319% of the country's total exports. The primary export destinations were Nigeria, Senegal, and Niger. And we're saying that 2024, we just got half of those exports going through. Tell us a bit more, sir, about this challenge. Can you hear me? You're muted, sir.
Yes, thank you very much for this opportunity. Palm oil trade is a two-way traffic. So there is export, there's also import. But in the case of Ghana, if you aggregate everything or you resolve the two directions, we are a net importer. In other words, our own production is less than the total demand that we have for palm oil. So that's a nice problem. It's a nice problem because it then gives us the opportunity or the potential to expand production, increase our efficiency so that we can level up at least with demand and look forward to even going further to be a net exporter with the advantage of the Africa Continental Free Trade Area, which has become a very huge market in which Ghana has the potential to trade palm oil into. But the problem we have at the moment is that if we look at the total production that we make locally, we are around 250,000 metric tons per annum. And the demand stands at around 400,000 metric tons. So there's a deficit of 150,000 metric tons of crude palm oil. And this is what we need to close very quickly. And as we close the same, we are creating jobs, we are expanding our local industries, which then fits into the 24-hour economy which the new government is bringing, and also creating the jobs that our people need at the farm level, whether as smallholder farmers or workers in the plantations and the farms and so on and so forth. So we have a job to do.
Yeah, we have a job to do, including tackling the impact of the influx of cheaper oil. Talk to us about that and how competing countries are contributing to this decline in exports that we have witnessed. And again, how does Ghana's oil palm products compare to others on the international market? Plenty of questions in one.
Thank you very much. For edible oil, which palm oil is the main one, the demand in Ghana is about 180,000 metric tons per annum. That's refined edible oil. But at the moment, our local production is taking us to just about 90,000, meaning that there is about 90,000 that is imported into this country. And how does this come in? The largest importer into Ghana is actually very strange, and that's the country to the left, or sorry, yeah, to the right of our country. This country is small. They don't produce even up to a quarter of the palm oil we produce, and yet they are the ones pushing a lot of palm oil into our country, and the oil gets into Ghana and it looks cheaper, appears cheaper than what we are producing here. The reason is this: they bring this oil from Malaysia and Indonesia, Far East. They are a zero duty port. So whatever value addition they add to it, very minimum, they still have oil that is cheaper than what we produce in Ghana. And to make it worse, they let it enter Ghana, sometimes under what they call the ECOWAS Trade Liberalization Scheme, ETLS. But ETLS has thresholds for against the rules of origin. And they don't meet that rule of origin. So again, that's a lapse on the part of our policy implementation and compliance. We believe that if that is checked, that oil will not enter Ghana. We have a deficit, so yes, we need oil to come and add to what we have in the meantime. but it should not come under ETLS, waiving off duty and appearing to be cheaper. That is what the external factor looks like. But internally, we have a huge chunk of our production coming from the outgrowers, smallholders. They lack efficiency, so their yields are around 6 tons of fruit bunches per hectare, but they can easily get to 12 tons, doubling that production. The artisanal millers who use substandard machines are having oil extraction rates in the neighborhood of 12% to bunch. This can also go to be very modest, 16%. That 16% oil extraction, and that's about 30% increase in oil. And that alone will increase their oil production from the current 80,000 tons per annum by another 27 to 30,000. And if the about 100,000 hectares of the smallholder plantations that need to be replanted are also replanted, we will move from the 6 tons per hectare to 12 tons per hectare, which is double. And that alone will give us probably another 200,000 tons of palm oil. With these two major interventions, we will be self-sufficient. And a further 100,000 to be developed will make us a net importer with about another 100,000 tons of palm oil that we can export into the Africa Continental Free Trade Area opportunities. So we have homework to do as a nation. Actors in the industry have work to do. Of course, government and state institutions have work to do. And I'm happy that collaboration has already started between the Oil Palm Development Association of Ghana, OPDAC, of which I'm president, and the Tree Crops Development Authority, which is the state institution mandated to promote the development and regulation of some 6 tree crops, including oil palm, and also some officers of the new government reaching out so that we can have a consolidated plan, a workable plan that will move us from the status of a net importer to a net exporter within the next foreseeable future.
Hopefully that happens and the relevant stakeholders are listening. Thank you so much for your time, Samuel Avala, who is president of the Oil Palm Development Association of Ghana. We'll speak sometime soon. Hopefully the story would have turned around. I appreciate your time here on The Marketplace. You're watching The Marketplace, you're enjoying news. When we come back, business and politics. We're talking the politics of the city. Don't go anywhere. Well, thanks for sticking around. Welcome to The Marketplace. Business and politics. This afternoon, we discussed the politics of the city. The Bank of Ghana has ramped up the supply of dollars to commercial banks this month, bolstering the city's strong performance against the dollar over the past 3 weeks. Pretty unusual for the first quarter of the year. Joining me in studio, lead data analyst here at Joy News, also host of Beyond the Numbers, Kofi J. With more on this, just how strong is the city performing?
Well, so you spoke about the first quarter, case, and we've been tracking this from COVID period. You can see from 2020 to 2025. Although we are not done with the first quarter, that's why you can see the asterisks on the first quarter. You can see some sort of improvement in terms of the depreciation. In 2020, in the first quarter, was the last time we saw that we had a net or cumulative appreciation of the cedi against the dollar, 3.7%. Then we got back to depreciation mode in 2022. That was when we had our biggest economic, crisis, 15.6%.
The rate of depreciation, though?
15.6%, that was huge. And in 2023, increase again to 22.1%. And we saw the improvement when we started the IMF program, 7.7%. And now we are talking about 5.4%, although we are not done with the year. These are some of the factors that we think are contributing to the stability of the cedi we are seeing so far. So globally, we are seeing the dollar not being as strong as it used to be in the first quarter of 2024. Why? Because in the US now, investors are looking to put their investments in gold rather than the dollar because of the change in government and some Fed decisions. More inward remittances, we know from the Bank of Ghana data that currently, or in the last quarter of 2024, remittances alone brought in about $1.7 billion into the country. That was the last quarter of 2024. So definitely creating some sort of, buffers for the Bank of Ghana. You also saw the December supply boom in dollars where we saw a number of foreigners who came here, they spent. So definitely it takes some time before the dollars that they pump into the system will dry out. So all of this is affecting that. Then we also have some of the multilateral inflows we've had. The 360 million we got from the IMF, World Bank is also bringing in some money, the African Development Bank and all of that. And the last one has to do with the fact that Bank of Ghana itself is contributing some $120 million dollars to BDCs in terms of the auctions to help us in the procurement of fuel into the country. So not just five. These are the key factors that we are looking at in terms of helping to stabilize the cedi. This is the $1.7 billion that I was talking about in terms of remittances. Now, if you take the key foreign exchange earners, you can't even compare gold, neither cocoa or oil to what remittances is bringing to the table. Because we know you exported close to $11 billion of gold, worth of gold in 2024, but just about 15% was surrendered to the Bank of Ghana. That tells you that if you take away cocoa, remittance alone, what remittance brought in the last quarter of 2024 is now equivalent to the entire export revenue of cocoa in the entire 2024.
You don't say.
Cocoa actually brought, the entire 2024 brought $1.7 billion. Remittance in the last quarter of 2024 alone brought $1.7 billion. So it is now important to start conversation around how we can close the loopholes in the remittance space, Darryl.
Wow. That's quite unbelievable. Yeah. And so Q1 auctions by BDCs, you're going to show us that figure as well?
Yeah, of course. This is the $120 million that I was talking about, that Bank of Ghana is making this available for the bulk oil distributor companies. Now, the BDCs who have access to this money, they'll auction them. I think that if you look at the calendar that the Bank of Ghana put out, it means that every month they are ready to auction some $20 million, right? And that means that if you look at the first quarter, they are ready to put in some $120 million into the first quarter of the year. That alone is enough to help stabilize the cedi. So a number of factors helping us to see the good health of the cedi that we are saying. Now, I think if you have 15 cedis, 50 pesos, you can get $1, right?
Yeah.
So, yeah, so some
right.
sort of good
I want to dwell a bit more on the monetary side of things and what the Bank of Ghana has been doing. Like we pointed out, the Bank of Ghana has increased the amount of dollars it sells to commercial banks. I don't know how that differs from what we were doing previously in previous years. Maybe you can tell us, and how sustainable that is.
Previously, what we were seeing was that Bank of Ghana was heavy in the market doing some sort of forex interventions. So in 2023, for instance, I think, or 2022, Bank of Ghana had to come in, do some intervention worth some $1.9 billion. That was huge. They had to save the cedi with such a huge amount. Then in 2023, we saw that the forex intervention had dwindled to just 1.1. And last year, because of some of the inflows that Bank of Ghana got, although they intervened, but was not as high as that of 2022 and 2023, because already, government is not doing forward sales. They were really looking forward to syndicated loan for the cocoa syndicated loan. But unfortunately, because of the high risks attached to our cocoas, we could not agree because the coupon rates were very high. And so we are now doing the spot market sales. That alone is also good for the Bank of Ghana because now you sell your cocoa and you get the money up front because you've not done the syndicated loan that the money would have come somewhere September. So by the first quarter, you may have spent maybe half or a majority of that money. Now you're getting the money on the spot market. That tells you that the money will be coming in as and when you sell the cocoa. Although we still owe, but I think that this system is helping the Bank of Ghana to build some buffers. And we've also seen the international reserves of the Bank of Ghana also improving significantly. Now we are above 3 months of import cover. I think somewhere 2023 or 2024, we were below 2 months. In 2022, we went as low as below 1 month of import cover. So we've come a long way, and that's all increasing or contributing to the current.
And it sounds good, all that you were saying. And any government in power, and that's where we come to the politics of it, we like to take credit for the city's performance,
of course,
right?
Yeah.
But then the concerns are what is being done on the fiscal side. The 2025 budget is going to be presented. I mean, you just wonder, for how long can the Bank of Ghana do this, and how can the government also help in stabilizing and ensuring that the city strengthens in value? We've got 30 seconds.
The Bank of Ghana itself has instituted the gold, the gold coin, which means that investors are no more chasing after the dollars as the only way to, as a store of value. They now also have the gold coin. Now gold is very valuable. Also, the government itself is introducing the gold board, which means that they are going to regulate, the purchase of local gold in the system. That will mean that governments will have access to gold, and that will also mean that they can now do some of this gold for oil and the exchanges that they've been doing so far.
Right.
That will reduce the burden we usually will have on the demand for the dollar. And definitely, maybe in the second quarter of the year, we should see additional improvement in the health.
You saw
of
the
dollar.
website that they are sacking us. Anyways, Beyond the Numbers is coming up tomorrow. They've got 2 days. They were on yesterday. They are on tomorrow at 5:30. They're going to be talking a bit more about remittances. So, make a date, 5:30, right here on this channel. More news, like Prince wants me to say, on myjoyonline.com/business. Moinani Group petitions IGP over police non-compliance with court order in WAP holder dispute. That is it. myjoyonline.com/business. We're back same time tomorrow. Don't go away.